Good morning and welcome to your macro analytics session for May 20th, 2019. This is Patrick Serezna here, and this is a recording only shortened session just to give everyone a quick update on the markets. Starting tomorrow, we'll be back to our normal schedule with a live webinar on Tuesday morning. So I wanted today just jump right into the technical analysis and give everyone a little foundation of what we're looking for in the markets. In our traditional manner, we'll always start off with the dollar index and just have a quick look at what's happening. The dollar remains relatively strong but has not yet broken to a higher high. Overall, we continue to see a lot of relative strength in the dollar, and it just needs really an accelerant to just drive a new trend move to the upside. If we have that breakout to new highs, we should be at 99 to 99 and a half in pretty short order on the upside. A lot of that will come on this euro. And so when we pull up this euro chart, the deterioration on the euro is coming right to the bottom end of this range. And like we were measuring out, there's a number of different ways to measure this out, but really what it comes down to is that any this price action remains very weak down to about 110. I mean, there's lots of room for the euro to get much weaker than that, but right now with this current weakness, we're not anticipating any immediate reversal. There's always a chance that the euro double bottoms or something of that nature, but we're not approaching it that way. We continue to be long dollar, short euro, and watching how this develops. The pound sterling breaking down, heading down to its previous lows in 2018 toward that 125, 126 support. What's interesting is Japanese yen is the one currency that is kind of marching to the beat of its own drum. We haven't seen any huge technical breakdown, but if we see that this continues to fail and then roll over, we will visit this one as a potential short opportunity. But right now, we don't see the technical weakness that we see in a lot of the other currencies. What the trade war certainly has done is accelerated the weakness in the Chinese renminbi, as clearly the PBOC is letting the currency go as the breakdown in trade talks develops. I think that if we see a breakdown to a fresh new low, lower than 2018 levels, coming in the coming week or two, that suddenly this will become headline news. It's certainly not there yet, but the speed from which they've been letting this currency go certainly makes this something to watch this week. Other than that, Canadian dollar is holding up much better than the Aussie. Canadian dollar is still very pinned, was still bearish and generally looking for the Canadian dollar to go lower. But where the real breakdown has already developed is in the Aussie dollar. As we broke that 70-cent level and are sustaining multiple days down below this level, the path of least resistance remains for the Aussie to continue lower. On the very short term, if we broke this, let's see, to a 4-hour chart, this measured move right here is just finishing. And so as it finished that, we're getting a reaction, but that's just an opportunity on retraces to go back and short the Aussie all over again. So we remain on the short side of this trade. I'm just moving to commodities. I want to jump over to crude oil, and crude oil looks very much like the stock market, which is that it had a rally, but so far the rally has been rather weak. But again, I'm going to just break this to a 4-hour chart. So far, the rally has been more or less just simply a Fibonacci retracement of this rise, and of the decline. And if we see crude oil roll over under $64, that certainly opens the window for this to be a zigzag correction, which is that often you'll see that the corrections will zigzag in two particular waves, and that would certainly open the window for crude oil to make a drop move from its current $63, $64 area down to the mid 50s. and that's certainly something that we're keeping a very close eye on. We keep dabbling with the short side of crude oil, and I don't see any reason to change that narrative at this stage. Other than that, just looking at some other commodities, copper remains incredibly weak, just supporting the global slowdown, and so we'll watch that. Though, just quickly touching on gold, we dabbled with the idea that this gold could be a breakout. We obviously hedged it, and lucky we did so. The in this current breakout on gold really does appear to have been a false start, at least on the surface. Usually, when you get a green breakout candle, the way we had over here, usually you want to see the bulls defend it and subsequently follow through on it. And instead, what we witnessed is the sellers, right after the breakout candle came in, almost immediately sold it down, and we're right back to the lows. But when you overlay that with how the price action in silver prices played out, that it had no breakout attempt on the upside and is already broken to lower lows. So clearly, this entire narrative, this idea that gold was a safe haven in these uncertain times and could potentially rally with the dollar, well, that narrative is simply not being supported at this stage. We have a breakout trade open on that GLD. We'll talk about that in tomorrow's breakout trader session when we're live together. The Other than that, lumber prices remain relatively weak, getting a little bit of a turn on some of these grains, like wheat prices seem to be on the very short term bottoming and then reversing. I don't want to overread into this, but corn also had a bit of a reversal. But what will be really interesting, very similar to gold, is whether or not the bulls can follow through on some of this, or whether this is just going to be a false start and then sell right back down. We could watch it throughout the week and see how those prices develop. So I want to move on to treasury bonds, and well, this is the 10-year bond, but I continue to be quite bullish. I don't see any reason to get overly nervous here. I mean, obviously, as any technician can observe, that there's a risk of a double top formation developing if it rejects along these highs. But when you look at the global macro backdrop, to me, I don't see any reason why lower yields are not a realistic expectation. And so for me, all this needs is a kickstart. If we have a break to a higher high, it becomes on everybody's radar. And as soon as we have this trend set in motion, then we're talking about move to 126, 127, but potentially something even much bigger afoot. And so this is a major trend we're watching. Certainly, all of you have many positions on in different ways on treasury bonds, whether it's breakout trade or options for income or hedge positions trades. And so we're watching. This is a very critical moment in treasury bonds to see how this plays out. The other than that, the corporates, LQD, this is investment grade, just hovering along its highs. Junk bonds as well, just off of its highs, but we haven't seen any major breakdowns here. We'll watch and see how it develops. I'll give you a bigger rundown tomorrow during the live webinar. Other than that, let's jump right into the stock market and see what's going on here. And right now, the stock market, the S&P 500, is down about 25 points, give or take. And really, though, that's not about the amount of points, but rather what the price action has done. Think of it very similar to what gold did on the breakout. So what ends up happening in these scenarios is that a lot of the bulls will get the bull signal as you get the breakout candles. So we're down to a 4-hour chart here, by the way, on the S&P futures. And the question is not whether the bulls made the advance, but do they defend it, or do the sellers just use the strength to distribute into? We obviously had that huge option gamma roll-off on the expiry over the weekend, and so we're back to a much more natural trading market. And so this is why what price action happens over the next 24 to 48 hours will be really important. If we see that the S&P 500 is ripping through these fib zones and just simply selling right back down to 2,800. It is very unlikely that 2,800 is the low at that stage. That more ominous drop in the stock market is coming, and with our SPY positioning, we currently do not have the call hedge. We unwound the straddled and in the money strangled to now just being a long a put option, and so we're gonna just go at least another day to see whether or not this accelerates. If it's accelerating to the downside, it makes very little sense for us to rush in with a new call option. But if we see that this is not breaking down, we'll explore whether or not to put on the other leg. And we'll talk more about it in the next two trading sessions, during Breakout Trader and during the positions trades, portfolio analytics, sorry, on Wednesday. But certainly we'll watch and see what plays out. If this was to zigzag in a traditional manner, very similar like I've shown on crude oil, if this is the midpoint retracement and we're going down this way, then seeing the S&P 500 trade back down to the low from March, which was around let's say 27 and a quarter, is the first target. But I mean, if this thing properly accelerates, going down to 2650 is not unrealistic. And then, of course, comes a whole array of additional questions as to whether this melts into a crash or other types of liquidity events. Let's take it one step at a time. The key is how it trades this morning, and particularly what we're watching is that do we head right back down to last week's low? I mean, if we're heading for a test of 2,800, everyone needs to be on alert, because what happens, you want to think that all the bulls that gave it a shot last week to get in on the dip, well, when they realize that they're early to the trade, that's what creates the risk of a liquidity event where they all try to sell at the same time, and that can create that air pocket that really accelerates the downside of the market. I'm not necessarily saying it's a certainty, but this is the conditions from which these things happen. So we have to watch very closely what happens here. The key, I think, here is that we're looking for this retracement zone right in here, and what happens here along this low. And so nonetheless, that's what we are watching. What else is there? That's looking at the Russell. It'll be very interesting to see whether the Russell breaks these consolidation lows with this failed rally attempt. If we see the Russell break down below, let's just rounding it to 1500 for simplicity purposes, any acceleration below that level really does confirm that the Russell has rollen over as well, and so that's also something to watch. China continues to roll over on the bounce. It really does, again, look very much like the S&P, which is a failed rally rollover, and the selling's kicking in right off the bat. When you look at the Euro stock 50 rolled over right off the Fibonacci retrace, and is once again selling, rolling over for a sell-off. You're seeing this same pattern developing on almost all the global markets. Emerging markets continue to be very weak. A number of members have pointed out, but yeah, we don't have a position in emerging markets, but it's so hard for me at this moment to chase. We need some sort of a bounce or rally the way we've seen in the other markets in order for us to sell. So if we had a short-term pop from 40 to 42, 42.50, we can turn around and re-enter or just enter a fresh new emerging market short. But I'm not doing it at fresh new lows or multi-week lows at this stage. I'm not going to chase this, and so we'll watch it. Maybe it will set up by Wednesday, Thursday for us, but let's take this one step at a time. Anyway, the that just wanted to give everyone a quick update. It's going to be really interesting to see how things continue to trade here this morning, but our positions are more or less the same as they have been in the past in terms of our views and our major macro themes. And so let's see how it trades throughout Monday, and then I'll give everyone a more complete update during the breakout trader session on Tuesday morning. Otherwise, thank you very much and have a good trading day.